which can be used, or the amount of products produced. The business can be as large or small as the owner desires. And fifth is there can be a number of employees. Additional management may be hired, and property may even be co-owned with others. And lastly is a sole proprietorship does not necessarily need to own any assets. One can exist even when all land and machinery are leased. Next is sa pagdat sa income taxes naman, the owner of a business organized as a sole proprietorship pays income taxes on any business profit at the tax rates in effect for individual or joint returns. Business profits and capital gains are added to other taxable income earned to determine the individual total taxable income. So, pagdating sa income taxes, for tax purposes, a sole proprietorship is a pass-through entity. Business income passes through to the business owner, who reports in it on their personal income tax return. This can reduce the paperwork required for annual tax filing, but it's still important to understand which sole proprietorship taxes you will pay. Next, next reporter.
The partnerships. A partnership is a form of business in which two or more people operate for the common goal of making profit. Each partner has a total and unlimited personal liability of the debts incurred by the partnership. So yung partnership daw po ay isang uri ng negosyo na napapalooban ng dalawa o higit pang tao para tumakbo ang isang negosyo. Partnership is a voluntary association of two or more persons to carry on as a co-owners of business for profit. Partnerships are governed by code of rules called the Uniform Partnership Act, which assumes an equal partnership in everything including management decision unless there is a written agreement specifying a different arrangement. Next slide, please. So, yun nga po, ang partnership ay may pag-uugali din ito. Characteristic of partnership. So, partnership has three basic characteristics. A, profit and loss. The sharing of the business profit and loss. So, pag kayo po sa isang negosyo, ay dapat kailangan paghahatian niyo yung magiging kita at yung magiging expenses sa isang negosyo. B, property or asset, shared control of property. So, ibig sabihin po nito, ang yung pag nyo sa paano nyo papatakbuhin yung inyong magiging negosyo and yung magiging plans nyo dito. Letter C, management, shared, and management of the business. So, syempre, pag sa business, meron talagang proper managing dito upang maging successful ang inyong magiging future business. Next po. General legal agreement of partners. So may mga agreement din pagdating sa pagpa-partnership. One, each person involved participates in management decisions. So kapag ikaw ay nasa isang negosyo at may partner ka dito, you have the rights to make decision po pagdating sa negosyo nyo. Two, assets are owned jointly. So yun nga, yung magiging assets, magiging basta involved siya sa business nyo, dapat lahat ng nakasama sa business ay involved doon. Number three, sharing of profit and loss. So na-mention ko kanina about sa profit and loss. So kasali din dito yung profit and loss. Four, the parties or business operate under a firm name. This The parties have joint bank account for doing business transactions. So mahalaga din na mag-open kayo ng bank kasi ito sa magiging transactions mo in the future. Kasi mas madali kasi pag gagamit kayo ng mga banking system. Less hassle po yun. Number six, the parties keep a single set of business record. So yun nga po, importante talaga sa pagnenegosyo yung magiging record nyo sa inyong business. Kasi ito yung magiging proof na may business na nangyayari. Next slide po. The following must be considered by any potential partner. A. Legally, each partner has an equal voice in management. Control and majority of the partners must control the business unless otherwise stated in the legal agreement. B. Each partner has an equal right to possession and control of the partnership assets, property for carrying out business of the partnership. C. Unless otherwise stated, profit and losses are divided according to the specific agreement. Any withdrawals and wages that a partner receives must be treated as advance on his or her share of profit. D. Although the partnership business does not pay taxes, it must file income information and must therefore have its own records for income tax purposes. The partners then pay individual taxes on their share for the partnership income. Next slide, please.
Next reporter.
Okay, okay. Type of partnership. Ordinary or general partnership. A general partnership is the most common type of partnership. It refers to a relationship in which all partners contribute to the day-to-day management of the business. Each partner will have the authority to make business decisions and even legally bind the company contracts. A general partnership is a business agreement by which two or more individuals agree to share in all assets, profits, and financial and illegal liabilities of a jointly owned business. It is important to note It is important to note that each general partner must have be involved in the business. Next slide, please. What is limited partnership? A limited partnership is a relationship where one or more partners are not involved in the day-to-day management of the business. All limited partners, sometimes known as silent partners, will serve slowly as investors in the business, with the funds that they contribute being the extent of their liability. However, the limited partners do not have decisions making power in the company, withdrawing funds, and etc. Limited partners do not have stock or stockholders. Each limited partners has a, a specifically stated percentage of interest in the income from the entity. Limited partners do not receive dividends but are entitled to their share of the income. Next slide, please. The difference between general and limited partnerships are: A. Limited partners cannot participate in the management of the partnership business. B. Financial liability to partnership debts and obligations is limited to actual investments of partners in the partnership. C. The liability of general partners can extend even to their personal assets. The difference between limited partnership and general partnership. The general partnerships are business where each partner has total liability for the debts and actions of the partnership as a whole. Each partner can take part in the daily management of the partnership and they share equally in the profits of the business. While the limited partnership has advantages that do not exist in a general partnership. Each limited partner has a liability for the debts of the business limited to the extent of their investment in the company. Should the business become liable for some debt or legal